All right, let's talk about something that can literally make or break a trucking business: how you insure your drivers. Now, it sounds simple enough, right? But believe me, one tiny decision in how you classify them as an employee or as a contractor can have absolutely massive financial consequences. Let's get right into it.
So, this is the big question, the one that keeps owners up at night. Are your drivers W-2 employees, or are they 1099 independent contractors? It might seem like just a tax thing, a bit of paperwork, but getting this wrong can expose your business to devastating audits, huge back premiums, and crippling legal battles. The stakes? They couldn't be higher.
Okay, to really get to the bottom of this, we're going to break it down into 5 key parts. First, we'll start with the insurance basics that everyone needs to know. Then, we'll look at the 2 very different types of drivers. From there, we'll step into an underwriter's shoes to see how they see your business. After that, we'll tackle the huge risks of misclassification, and finally, we'll talk about the right insurance for true independent contractors.
So, first things first, let's lay the groundwork. Before we dive into all the tricky stuff, we've got to understand the foundational insurance that's there to protect both your drivers and, of course, your business. That foundation is workers' compensation, or as pretty much everyone calls it, workers' comp. Think of it as the Bedrock. It's a state-run program, and it's designed specifically to protect W-2 employees. So if a company driver gets hurt on the job, this insurance is what covers their medical bills and their lost wages. And here's the key: it's a no-fault system. That just means it pays out benefits no matter who caused the accident. For employees, this is pretty much mandatory in most states.
So how does the insurance world actually categorize all this risk? Well, for most trucking companies hauling general freight, it really comes down to one number: class code 7219. This code was created to cover, well, hauling stuff. It actually simplified things a lot by getting rid of the old separate codes for local and long-haul drivers, because really, at the end of the day, the risks are pretty much the same.
And here's where the rubber meets the road, financially speaking. The average rate for that 7219 code is about $6.33 for every $100 of payroll. So let's put that in perspective. For a driver making $100,000 a year, the company is paying around $6,300 just for their workers' comp. And you got to remember, that's just the starting rate, before any other risk factors even get looked at.
Okay, now we get to the real heart of the issue, what I call the 2-driver divide. This is where it all gets complicated, because not every driver is the same in the eyes of the law or in the eyes of an insurance company. And this distinction, this is the source of almost all the confusion and the risk in the entire industry.
On one side, you have your classic W-2 company driver. They get a W-2, your company withholds their taxes, and they drive a truck that your company owns. Simple enough. But on the other side, you've got the 1099 owner-operator. These folks are independent business owners. They get a 1099, they pay their own taxes, they drive their own rig, and they can deduct all sorts of business expenses like fuel and tires. The crucial point here: one is an employee, the other is a separate business.
So with these 2 different types of drivers, how does an insurance company make sense of it all? Well, let's pull back the curtain and see what an underwriter, that's the person who actually calculates your premium, is thinking when they look at your application.
This quote really just gets right to the heart of it. An underwriter's job is to predict the future based on your past. And your loss run report, that's just your claims history, it's like their crystal ball. A pattern of a bunch of small, frequent claims doesn't just look bad. To them, it's a huge red flag. It signals that there could be deeper problems with your driver training or your maintenance schedule, and that points to a much higher risk of a really big, expensive loss down the road.
And trust me, they look at everything. Do you run regionally within, say, a 500-mile radius, or do your drivers go coast to coast? That's way more risk. Do your drivers have to load and unload their own freight? That's a major source of injuries. They're going to dig into what you haul, your CSA safety scores, your company's credit history, and a huge one, your driver's experience. A driver with less than 2 years behind the wheel, that's a massive red flag.
And you really can't overlook this hidden risk. Driving is one thing, sure, but the physical work of loading and unloading heavy freight, that's where so many of the most common and expensive claims happen. We're talking strains, sprains, and back injuries that can last a lifetime. If your drivers are doing this, your insurance risk profile just skyrockets. Which brings us to what is probably the single biggest minefield for trucking companies. How in the world do you handle insuring those 1099 owner-operators? This is the spot where one simple mistake can have absolutely devastating financial and legal consequences.
So look, here's the bottom line. If you treat an owner-operator like an employee but you call them a 1099 contractor just to try and save money on workers' comp, you are playing with fire. You are taking a massive gamble. Because if a state auditor shows up and decides to investigate, they can reclassify that driver as an employee. And if they do that, bam, you get hit with a bill for all the back premiums you should have paid, plus some very, very hefty fines.
So how does an auditor even decide? Well, they run a series of tests, and the biggest one is all about control. Are you telling the driver when to work? Are you telling them what route to take? Do you require them to only work for you? If so, that sounds a lot like an employee. Are they driving a truck that you own? That's another huge red flag. A true independent contractor, a real business owner, should have their own insurance and, ideally, their own operating authority.
Now, this isn't just about avoiding an audit. It's about the cost of your premium, year in and year out. Your safety record directly hits your wallet through something called an experience modification rate, or EMOD for short. Think of it like a score that compares your claims history to the industry average. If you're safer than average, great. You could get a credit, a discount of up to 40%. But a bad safety record, you could end up paying 40% more. In this business, safety literally pays.
So, if you can't cover a true independent contractor under workers' comp, what is the solution? What are you supposed to do? Well, that brings us to a totally different kind of policy, one that was designed specifically for the owner-operator model.
The answer is occupational accident coverage, or just OCAC. Now, this is not a state-run program like workers' comp. It's a private insurance policy, and it's built specifically for 1099 independent contractors. It gives them a package of benefits if they get hurt on the job, covering things like medical bills, disability, and death benefits. This is what motor carriers can and should require their owner-operators to carry to prove they have their own insurance in place.
And the differences here are really stark. Workers' comp is state-run for W-2 employees. OC, or AC, is private insurance for 1099 contractors. But listen up, because this is probably the most critical distinction of all, the fault system. Remember how we said workers' comp is a no-fault system? Well, OC or AC is not, and that's a fundamental difference. Because it can mean that an owner-operator who is found to be at fault for their own injury might not be eligible for any benefits under their OC or AC policy.
All right, so we've covered a lot of ground. What are the big takeaways for your business? First, just know that class code 7219 is your starting point for workers' comp. Second, and this is the big one, getting driver classification right isn't just paperwork. It's your #1 defense against a nightmare audit. Third, remember that everything you do, from the routes you run to the freight you haul, affects your insurance rate. And finally, use occupational accident coverage as the proper tool it is to ensure true owner-operators.
So, we'll leave you with this final thought to chew on. The rules around driver classification are not set in stone, not at all. They're constantly being challenged and reinterpreted by courts and by regulators. So the real question for every trucking business out there isn't just, are we compliant today? It's, is our business model flexible enough to adapt and stay compliant and profitable tomorrow?